Good afternoon, friends. I hope you guys are well. I hope you are having a wonderful Sunday, maybe enjoying some time with family. I also hope that you had a wonderful week trading again some bullish markets, which always just puts everybody's mind at ease, seeing their stocks gently moving back to normal prices. Hello, hello, friends. I'll let Instagram send out the signal. They always like to play some fun games with us in the first 10-15 minutes of the live. But I love to see you guys on fast. Hello, friends. Nice to see you guys. I should do like a giveaway for like the first person that gets on. But the thing is, I don't actually know if I would know because Instagram doesn't show me when people are on or not. And if you guys can hear me, it's always like I feel like I need to learn sign language just to be, or ASL in order to see if anybody can actually hear me. So let me know, how was your trading week? Was it green? I see some of the people in the group that are doing taking some of our daily trades. So I hope to see you guys green. Nice to see y'all. All right. Well, I know it's your Sunday and you guys hopped on promptly, so good for y'all. We'll let another few people tap in. But yesterday was our first mentorship and we did a kind of a review on long calls and long puts and short calls and short puts before we get started with our more complex strategies. Nice. Look, if you trade only one day, you better make sure it's a green day, right? So congratulations to you. So we had a good week last week. It was very, very productive. For those who have been seeing my stories, you know that we take, so we have a weekly strategy, which if you attended the webinar on the weekly strategy, that has been green every week, but not as many people are necessarily taking that strategy because they want something that's a little bit more active. So then other members are doing the daily strategy. And I think that's been quite impressive. I mean, it's been, I think that we're 272 days into the strategy. And we have, for those that are taking the scalp, it's still at a 100% win rate. So I think people like that. People enjoy having a strategy they know that they can do every day, where they're going to bank some profits. And then that way it takes a bit of the pressure off with some of the more active trading or trades that may take on a little bit more risk or need a little bit more directional power behind them. But last week we just hit some killer trades. Looking at Gamma, we were able to position ourselves really well for, we had Gamma squeezes to the downside on Lily and on Team, and there was something else that had a downside squeeze, and that just was gangbusters. I think both of those went to 200 and almost 300 and something percent. So those did really, really well. Oh, also Palantir did really well for us. We had a 120 squeeze and that did really great. So and then also for HIMS, we had a squeeze to the 33. So when the news came out from, the whole Wegovy thing, since HIMS is going to be, I guess, a distributor, they ran straight up to the pin. So those trades also did really well. So last week was a really nice week. It was kind of easy trading. I think all of our trades hit. So, it's nice when you have a series of wins. It gives you and more confidence as well, because just that aggression and the downward moves in April were just so fast that you kind of felt like, am I on the right side of the market? Do I want to have 20 put side trades? So, you kind of try to take 2 or 3 really key trades to catch those downside moves, but everything has been positioning for this squeeze. And in part, it's literally what we've been talking about these last weeks. The reality is that when you just bombard the market with just really extreme uncertainty, the truth of the matter is that the market is so forward looking that it bakes a lot in until you kind of prove that they're wrong. about the bad news that they baked in. And so until now, in spite of the fact that we don't have any certainty on what's going on in tariffs, and we haven't really moved forward either, we haven't done anything exciting or spectacular, that basically like the avalanche of bad news has kind of subsided a bit. So, GDP came out last week, and that was something we talked about. So just to kind of follow up on what we said, we talked about the fact that the National Bureau of Recession Statistics, they essentially require 2 negative GDP quarters, but they have 7 points inside the recession data that has to be met in order to say that we are in a technical recession. So right now, actually, underneath the surface, we are not meeting any of those 7. Or I think maybe we're like almost at 1 in the list. And you can Google what that list is. It's like just technical rules regarding imports, exports, and all this kind of stuff, kind of technical balances. And so right now, the reality is that the data isn't showing a recession. So a lot of people are just saying that even though we already have this first negative GDP ranking that came out last week, I guess every day feels like a century these days. No, this last week when the GDP reports came out and they were negative, that was something we said could be a potential. But most of that was related to the amount of front stocking and front loading that people were doing with imports. And when it comes to GDP, imports are a negative. So when you have any kind of like pre-supply shock where you have just an influx of supply because people are preparing, whether it's for disaster or whatever, you end up with this massive negative on your kind of GDP growth. And so that information was in this GDP data point, and leading to the GDP release, a lot of people weren't sure how much of the front loading people were doing, especially with China, would already be baked in, or if that would have like missed the first quarter data set. So it didn't, it was there. And that was so once you excluded that supply shock, you actually had a positive GDP for the last quarter. So what a lot of people are saying is that essentially we could end up going back and revising this GDP report, and it could actually go positive, which is very strange. I think in the history of GDP reports, that only happened one other time. I think it was like in 2004. So, I mean, it's kind of a hilarious thing to happen or whatever. But usually what it is that when the technical recession is hit, they go back and adjust GDP, the first GDP report from positive to negative, because they realized there were aspects of the data that were like not seasonally adjusted correctly. And so actually GDP had been negative when it printed positive, but this quarter we may have actually had it the other way around. So our recession fears averted? No, but a lot of the recessionary data that would impact us is actually not, hasn't appeared yet. And a lot of it's because, we still haven't had we still have shipping is coming in still a bit normal, but we are going to end up in this season, because there's a 3-week lag in shipping data, that, all the ships that haven't left China since the Liberation Day, I'm not sure what I was being liberated from, but, I feel like that word liberation is just like become so, used so liberally these days. No, but all that to say that, there's at least a 3 to 4 week lag in data. So we will need another week or so in order to see how that shipping information hits us, and then how that hits basically different kinds of stores and companies, how much supply actually what had already been front run, how much ends up being needed that wasn't front run enough, or hadn't been front run because it hadn't been anticipated as being in a shortfall during this kind of negotiation period. I think that there's also reality of uncertainty that, we haven't actually hammered out any agreements, even with some of our most easygoing trade partners. So I think everybody expected Japan and Korea to have all this kind of knocked out quite quickly, and that hasn't transpired. Being that Japan is the number one holder of our bonds and treasuries, most people expected that because we already have such a deep relationship with Japan on an economic level, that would have been kind of the first country to, get its tariffs out of, get their tariff agreement out of the way. Liberation is like transitory now. Absolutely. That's hilarious. And it's true. But yeah, we have this, now we just have this situation where we're kind of in negotiations, but nothing's really moving forward, but nothing's moving backwards either in a way. So, the markets are really, really good at front loading a lot of information. And so as long as things aren't falling apart further, I think that, we continue to float up here. Now, the reality is that just looking at the S&P is at a very key inflection point. And historically, oddly, and I'm not sure why this is, but May 5th has traditionally been an extremely bearish day in the markets. And so being that we're like right at this key kind of, if you use a VWAP, we're at a really key kind of inflection point on the S&P. Just looking at the S&P, the fact that we've had 9 green days in a row, and I think that's only happened also one other time in history. I think that if we have a pullback this coming week, that would be the most normal and natural thing to happen. As we mentioned inside the Discord, end of month resettling gives you a massive push. And I think that, the end of month resettlement kind of gave us that really strong gust of buying from hedge funds and money managers and pensions and 401ks and blah, blah, blah. And that then gave us the energy into the rest of the week to kind of continue grinding up. And in part, that's because we were, for the first time in like 6 weeks, we were finally like squarely inside very positive gamma territory. So it was a really buy the dip situation. But May 5th tends to be a really negative day in the markets, just if you look at the historical data. So you might want to be kind of cautious and prepared for that. But as long as we're really above the 55.50, we're still overall in like a long-term positive gamma territory. So as long as we don't lose that level, then you will either see consolidation or we'll continue to see kind of this kind of grinding up for the moment. That doesn't mean every underlying is going to give us positive data. So, please don't exaggerate what I'm saying as being like a market-wide phenomenon, because 9 days of positive buying is just historically, it's an anomaly. So, you want to be ahead of, the, potential consolidation. Let's say this week we have a massive number of earnings, even though the last 2 weeks, the big earnings, the mega caps were like the thing that everybody was kind of anticipating. But I think this week we have a wider diversity of companies that are going to be kind of reporting from different sectors. And I think and from different levels. So from more small caps, mid caps, and large caps, even though not as many, I don't think we have any mega caps reporting this coming week. But I think we're going to get a lot on what's happening in software, what's happening in cybersecurity, what's happening in small caps, what's happening in crypto. I mean, we just have a lot of a lot going on at this coming week. And I think that, it'll be really important to hear, how, like, what the response is about tariffs. Each of these different companies have a completely different global reach. So, how Disney reports on what's happening at their US-based theme parks, and, what is happening at their international theme parks. how that has impacted them. I would like to hear how the weakening US dollar may have supported Disney, because if you notice, Disney is one of the few stocks that when some companies were actually having a second leg down, it was kind of like giving us like a few days of a nice little base, even though Disney had just been so weak. And I was, in Germany, it was, or all of Europe, actually, we had our Labor Day. So everything was closed Thursday and Friday. And I was surprised by the number of families that were going to like Disneyland Paris and Legoland and all of these kinds of places. Because normally it's just such a short weekend, and it's literally the weekend after our Easter holidays that most people weren't like traveling anywhere for the Labor Day weekend. But this time around, people were really like going for it with their families. And I wonder if the fact that a lot of those companies are kind of their rates are based off the US dollar, if maybe for like third country nationals, if they're going to the parks based outside of the United States, if they're actually kind of benefiting from a weakening dollar, and the fact that those clients are still visiting and patronizing, or anyways, going to the theme parks, if they're going to talk about that. So I would like to hear from Disney about that. I would also like to hear from Disney about the whole DEI thing. I know that they were kind of the center of a lot of controversy because some of their films were seen as being too pro-diversity, and some people just didn't like that. We also have ConocoPhillips that is going to be reporting this week, and some other energy companies. We also have this week where OPEC is going to be talking about their next next meeting. They're actually going to be deciding how much more oil and gas are going to be letting into the market. And considering how depressed prices are right now, that would just depress prices even further. That's great for inflation, but that is quite bearish for actual oil companies because their kind of revenues are based on the prices of oil and gas stabilizing. So if those continue to contract and create this kind of backwardation, it's really not great for them. So I want to hear what, ConocoPhillips, what Cheniere Energy, some of those other energy companies, what they have to say based on what's happening with energy prices. Now, it could be that right now energy, like the whole energy sector is just, a lot of companies are so depressed, but they're such bellwethers that this is kind of like a really great buying opportunity. Because as I mentioned before, down in 2020, there was a moment where energy went negative, and that was like one of the best buying opportunities for energy companies and for everything like crude and like the gamut. So I'm interested to see what they say. If they have a clever way of combating this kind of oversupply, then they may encourage new buyers to come in. I know that the other thing is that a lot of these companies, based on Biden's policies and the expectation that Biden or another Democratic president would get 8 years back to back, a lot of energy companies started investing billions in kind of transitioning towards more green energy. And now the fact that, Trump is in power, that's kind of all gone topsy-turvy for them. So again, I'm going to be really interested to see, how that all plays out. I think CEG is also this week, but I don't know why. Maybe it's just from the distance I don't see it. But VST is this week, and that also paid us out massively the last year and a half. But that's had a massive correction now. And so, this is actually like one of the first kind of buying opportunities we've had in forever. VST, CEG, and a lot of the other earnings companies. And as Derek pointed out, he said, yeah, definitely a great buying opportunity. CEG right now, dirt cheap. And also remember, this is before summer when prices increase. Yeah, I completely agree. We just made hand over fist with most of those companies. Our shares were like over 100% return. So, people were frustrated when they couldn't get in. And that's kind of how it is with energy. When you have massive changes in the commodities prices, then, they kind of set in their direction and then just keep churning. But then when you have a negative impact, a negative kind of commodity situation, then those prices can depress rather quickly. So if you can kind of find where you might be finding a base or where you've just come down too far, then energy companies are a great place to, snap back in. Some of the mini caps have also started to do really well. The space companies like Lunar, Red Wing, ASTS, a lot of those companies, they obviously took a first hit when the market turned around, just being small cap companies, really mini cap companies. But they're all companies that are doing a real thing, and they have real products that are being really used, and they have real government contracts. And so you noticed about 4 weeks ago, even before before that second 10% leg down, most of those mini caps, including SoundHound, including IONQ, and some of the quantum computing stocks, they were just kind of flat. They weren't going down anymore. And it kind of demonstrated that probably their original founding members weren't really selling any more stocks. So there wasn't really any more downward potential for those stocks. And now we're starting to see them carve out a really, come out of their really nice base. And Oh, and I do see CEG now. Constellation Energy is Tuesday morning. So I was like, I know I had it on my list of like what's reporting. So I am interested to see, because I can see SoundHound is reporting, and some of the other mini caps. So, those companies, they're cheap enough that, utilizing a smart cash generating system against them is interesting. So, doing something like buying shares and then consistently selling puts against them, you can generate, a decent income. Now, of course, you have to remember they're mini caps. So if they're giving you even $40 a week, that's a lot of money for a stock that's literally like $8. So you still have to keep keep the ratio evaluations in mind. But for people who are scared of selling strategies, they don't like selling calls, they don't like selling puts, they don't like selling strangles, they feel nervous about it because they're worried about the margin, then finding a mini cap stock that you really love, not a penny stock, that's too much volatility, but like a mini stock, like an IONQ or a Lunar or something like that, and then getting your 100 shares and then selling around it is a great way to build your confidence so that you can start like branching out to more other companies that you like that might be of slightly higher kind of valuations. We have, like I said before, we have a lot of software companies that are going to be reporting, and so that was an area where we did really, really well last year. Those obviously, just like everything else, took a hit, but the reality is that some of the software companies still haven't really bounced back the way that I would have expected. So Snow has done really well, but I would have thought that Marvell also would have had a much stronger kind of pop. But that hasn't really given us the move that would be exciting. But, things like Datadog have done well. FTNT, more cybersecurity, but kind of in the same, equivalent genre. They have done really well. We have done really well with FTNT. That its slow movement makes it a great stock to sell around. So, we have been scaling into shares of things like FTNT and Marvell and whatever since like 3 years ago when the prices were nothing. And so holding on to those shares, seeing them hold their value has been great, but then also just being able to generate some extra income while they're kind of figuring out if they want to move up or not. So, there's just too many stocks this week to talk about everything, But, you have a lot of, right now, Gamma is giving us some really clear kind of indicators of upward and downward movement. And like I was saying last week, we had really strong Gamma level, both for Team and Lily, that were way below us. And I told the group, I said, it's a Gamma squeeze to the downside. That's like all I can call it. But I was like, everything is just so bullish. Could it be that these are going to be the two things that kind of fall apart on us? But they basically went exactly to our levels. So there are some stocks that, for whatever reason, institutions have sold positions against them. Maybe there are details under the behind the scenes that haven't been revealed yet, that are impacting these companies because of tariffs or because of other economic issues or a weakening dollar. What's the word that I'm looking for? Some of those companies, you don't know in advance, like what their report is going to say. That could frustrate the market, but institutions already have their bias baked in. And so being able to see that using these Gamma levels was extremely helpful, because both we were able to obviously capitalize on it by getting short the position, but also not trying to get long, because Team has done really well up until their earnings. And after their earnings, they did give back much of the move. I think, what was the other one? Was it Spotify? There was another one that had like a really strong gap down, and then on market open, it started to kind of give that back. Amazon did something similar when they came out with the news that they were going to start posting about tariffs, and then Trump got really frustrated about that, and then they had a big gap down. But then right after market open, you could see they were just, getting bought back up. So yeah, some of these stocks have done really well in spite of, the fluctuating news. And the fact that, companies like Apple and Google are doing massive buybacks. It shows that they just have an exorbitant amount of cash on hand. So they have the power to kind of shift and jive with whatever it is that's going to come out with the tariffs. They did communicate that they obviously have plans. Apple talked about the fact that any of their US products would be produced in India, and then all of their international products would be produced in China, and that would be their way of coping with tariffs. Every company has their way of kind of dealing with how things could pan out. And then just the reality is that this earnings report doesn't have actually any data that is directly related to earnings, directly related to tariffs, right? Because they don't know exactly how tariffs is going to affect them. The biggest issue was what the forward guidance was going to be. And I think companies kind of realized, Walmart and Google both kind of gave away the game. And, where Walmart said there are just too many moving pieces, so there's really no sense in giving forward guidance. And they were punished for that. But then Google was like, I don't want to say like, let's just make it up. Like, let's just pretend we know what these tariffs are going to do. And then if we give people like confidence that, we know what we're doing, it will make people feel good. But isn't that the point of forward guidance? Like, you don't really ever know what's gonna, you can try and guess all the economic things that could happen in any kind of 3-month span. But how many people were giving in their earnings report, like, I think Russia might invade Ukraine, or, hey, let's have a genocide in the Middle East, or, hey, why don't we just, start doing child trafficking in Congo? Like, nobody knows those things are going to like transpire ahead of time. Well, some people know because all of it's being kind of talked about in the background, but they don't come out in their earnings report and tell you how they know that some of these horrible things may be taking place in the background and how they're going to respond. They just kind of have to give you some kind of forward guidance that gives you confidence that their business isn't just going to fall apart. And Google was definitely rewarded for that. Anyways, Google's earnings were good. And most of the mega cap companies, their earnings were good. So it was just about how they could give confidence to the market about what they were going to do going forward. And since the market in these pullbacks had already baked in so much negative energy, just anything positive got people kind of excited about buying again. So, last time when Derek and I had our live together, we did talk about the India ETF, INDA. So, I mean, we talked a lot about different emerging markets right now because of the weakness and the weakening dollar. And I don't think this is the base for the weakening dollar. If you want to make manufacturing in the United States popular, you need more than Americans to buy stuff made in America. And people can't afford to buy stuff made in America when the dollar is like at soaring rates. So having a weakening dollar is helpful to the concept of reshoring manufacturing. But it also means that other countries are significantly outperforming us. And something like, like Brazil has just done phenomenally well. And I think Brazil will continue to do very well. Brazil was probably the number one financial recipient from the tariffs 1.0 with Trump. And why? Because a massive part of farming in the United States was our sale of soybeans. And when we implemented the whole Trump, the first go around of Trump tariffs, China stopped buying U.S. soybeans. And actually, China never came back to buy U.S. soybeans. They just transitioned to Brazil. And now they buy all their soybeans from Brazil. And Brazil got a massive influx of money because of that, because they were able to absorb that, those contracts. And again, something similar will happen where the U.S. and Brazil have produced a similar commodity, and China won't want to get that from the United States, and they'll be able to get that for less from Brazil for a potentially even better product. So I think that there are some aspects of this tariff war that we won't come back from. Oddly, the people who will probably suffer the most are the people that love Trump the most. So he doesn't have anything to lose, right? We just have to be kind of honest about that. If soybean farmers love Trump and he totally destroyed their businesses and they collapsed and, they were bailed out actually, because their businesses all collapsed, but they're not going to get bailed out again. And they still, not all of them, but a significant percentage of them did vote for Trump in this last election. So they're not happy about what's transpiring, but it's kind of like, is this exactly what you wanted? I don't know. Because nothing that's happening now, we didn't already pass through during Trump's first presidency. So I don't know why people are acting like, oh no, we don't have anybody to work on our farms. Didn't we already do this, guys? Haven't we already been here? Why are we regurgitating this conversation? So, I think that his base knew what was happening, and no matter how much they complain about it behind the scenes, whatever it is they were looking for, they were willing to make concessions of their own careers in order to get him back in power. So I don't know. I hope whatever other agenda they were believing in is really there for them, because I don't know, if you're a farmer, the tariffs are a total disaster. You're like the people that are suffering the most, because China was one of your best, one of your best buyers. So there's that. This week, the big thing on the agenda for this coming week is FOMC. I don't think that this coming week is the big macroeconomic news kind of thing that people may be expecting. I think that Powell has basically come out and said everything that he needs to say. That the reality is that they're in a very tight position. They have two very opposing mandates: full employment and price stability, so inflation. Right now, inflation is coming down, so that's doing the work for them. But they don't know how tariffs is going to impact inflation. And the reality is we don't have any new information to help Powell and his team kind of work to have any kind of projections, because their big thing is that tariffs are transitory. They create a transitory inflation. Once everybody knows what the tariffs look like, they know how to respond to them. They know how much the consumer can absorb, how much they have to maybe shift their market structure or whatever, but that at the end of the day, the businesses know how to respond to the change because they actually know what the change is. And the reality is that if nobody knows what those changes are, and they're potentially much more significant than anyone could have imagined, then they're going to end up in a situation where inflation might not be transitory. And so even though inflation has come down significantly with these negative prints, they can't just hedge their bets that 4 months from now, inflation won't have a massive, pump back up and then actually stay there, because even if they have 1 or 2 months of really high inflation, their expectation had been that, yeah, we can go back up to 3.5, 4 for 1 or 2 months, but then, that will then just go right back down because everybody would have adjusted to the new pricing structure. But if you don't know what the tariffs are going to look like, then, that transitory piece isn't really transitional. So they have that, and Powell has spoken on that multiple times. And then the other piece was the issue of unemployment, that they weren't even if they expect that Doge and all of these things could impact unemployment, the reality is that till now, the labor market is still really strong, and unemployment numbers, historically speaking, are still actually quite good. So, they don't want to put themselves in a position where they start doing any kind of cutting that stimulates reflates inflation into a transitory shock with the tariffs. So I think that probably this week, it'll all just be kind of something in the same of what we've been hearing for Powell. I don't think that they've had any news that should cause them to kind of, about face right now. But probably the information the market is going to be most interested in is what are they going to do in June. And I think the market right now has baked in that I think it's like a 60% chance that they'll do a 25% cut in June. So we'll see if that's, if Powell kind of gives any kind of indication about that. Right now, the futures market is saying that in the next 18 months, that we should see 4 rate cuts of 25%. So that's not just for the rest of 2025. That would be for 2025 and 2026. And right now, the data they pull for, the projections for Fed funds rates, it looks like the market is expecting 3 rate cuts of 25% or of 25% in 2025. So right now, the futures market and the Fed's fund rate data expectation are a little bit disjointed, just because it would make more sense that we do 1 or 2 cuts in 2025 and then 1 or 2 cuts in 2026. And I think that the reason that the market is baking in the 18 months, the 4 rate cuts, and is because of the fact that they're expecting Waller to be the new Fed chair, and he tends to be a little bit more dovish than Powell. Now, in his last kind of few speeches that he gave, he did come out to be a little bit more hawkish than his normal position. And I think it's because of the fact that he realizes that there's a lot of political pressure on Powell, and he doesn't, Bessent did this weird thing where, in October of last year, before the elections, before he knew that Trump was going to be president, he gave a number of speeches. And in this speech, he said the best way to kind of like disempower Powell is to say who you are going to elect as the new Fed chair. And then that way, the next nominee would then have a lot of power in their kind of jawboning with the market. So that would be your way of not trying to remove a sitting Fed chair, but by lifting up the voice of the next Fed chair. And especially because there's not that many more months between when that transition would happen. So if Trump were to be a little bit more vocal, or anybody from Trump's party would be a little bit more vocal, or kind of, put out data that Waller will be the next nominee, then that would obviously make everything Waller says that much more empowered. However, I think that Christopher Waller really respects Fed Chair Powell. So even if they may have diverging economic views, he does respect him, and he doesn't want to end the working relationship of many years in such a kind of, what's the right word? Yeah, I was going to say pungent way, but in such a kind of derogatory way. They have, the Fed chair, the Fed presidents have a really, really nice working relationship. They respect each other, even if they come from different political parties or have different economic points of view. They have a nice kind of camaraderie. They respect kind of the work ethic and like what they have done in order to get to those positions. So I would find it very kind of counter character to Waller to kind of backbite so I expect that Waller will kind of try, to give his flavor of conversation, but in a way that's still respectful of the fact that Fed Chair Powell is the Fed chair and he is not. He is just a Fed president. So I think that whatever the case, what Waller says this week will be most important. And obviously what Fed Chair Powell says will be most important. The person that you want to be listening to in the run-up is to Nick Timiraos of the Wall Street Journal. Almost said the Walmart Journal. I don't even know if that's a thing. Okay, the Walmart Journal. No. So the Wall Street Journal, he is the Fed whisperer. So anytime that they need to float something out that may be kind of a change of stance, he will, let the market kind of test that out sooner than later. So I think the FOMC meetings aren't going to be as wow. But like I said, May 5th is historically a very bearish day for the markets, and I'm not really sure why that day in particular. But I think next week, not this coming week, but the week after, I think those days are going to have, that week is going to have much higher volatility. We obviously have CPI and PPI coming out. We have a lot of unemployment data coming out. And I think we have like PMIs. So, we just have a lot of economic data like every single day, which is kind of what we had this last week where we had a bunch of pre-market data. And so that's why this week was quite busy, but I think that it's not this coming week that's going to be the big deal. It's going to be the week after. So that's really all from my side. What we do have this week though, that everybody should pay attention to, and this is not a red folder data set, is the 10-year and the 20-year bond auctions are this week. Those are super important. Those will impact bond yields. When bond yields are high, usually people try to exit the markets and, try to snatch up some bonds because those are just paying a really decent return at the moment. And if the bond auctions are poor, which is it's very possible that they could be with all of this kind of tariffs conversation, a lot of foreign countries don't really want to buy bonds right now when they don't know what's going to happen with the US dollar nor with their own currency against the US dollar. They're taking a little bit of a step back. So the, what's the word that I'm looking for? So, bond yields are going to be there. They could have some strong moves this week. So that's something that you want to watch. Where are you watching the auctions on so if you just watch on Forex Factory, they release the bond yields. So if the bond yields are released and they're higher than the current rate, then you know that the bond auction did not go well. So essentially they start obviously the auction very low in a drive to try and get those yields down. And if people buy up right away, then that's enough. But if obviously the price continues to press higher because people aren't interested, then those numbers are immediately released, the kind of range of low to top buying. And then it starts to bake into the bond yields, and then you'll start to see some strong movement. Yeah. So let me know, is there anything that you guys are particularly interested this week with earnings, or any stocks that you're most interested in? Let's see if we see anything together that's of interest. Oh, let's take a poll, actually. How many of you guys think that Elon Musk is going to actually be replaced as CEO? And how many of you think that it was a hoax? Or it was fake? It was truly fake news? The whole, that the board is looking for a new CEO. How many of you think that that was true? And how many of you think, nah, they're sticking with Elon? The India ETF that Derek mentioned is INDA, fake news. So we have 1 fake news, 2 fake news, hoax, so 3 fake news, 4 fake news. And do you know that now SpaceX has its own city in Texas, and I think he has a bust statue of himself there? That is so weird. I had to say, this guy is I don't know. He is hilarious. That's all I can say. Maybe only the only polite thing that I can say about the gentleman. Most semiconductors. So I think, is it AMD is reporting this week. We have some other smaller semiconductors that are also going to be reporting this week. I think that semiconductors are, he is looking like a dictator. That's maybe the right word. I think if you look at, NVIDIA, that is at a very key inflection point. It is just below the 100 and 200 moving average, but it is above the 20 and 50 moving average. So it's kind of squeezing into this kind of sandwich of moving averages. It did not really break above its resistance. I would have liked to see on Friday that NVIDIA got above about the 116 and that it closed its Friday candle there. The fact that NVIDIA closed at the 114.50 is literally right below the kind of previous resistance area that we already tested twice. And I'm really big on body closures. You have to get body closures above or below any kind of support or resistance or trend line. When you just wick above, that's usually just some kind of manipulation or some kind of fake out. So the fact that NVIDIA is still below its downtrend and is at that resistance point, I don't love that look for it, but it's paid us really well. Anybody that's been listening to the channel, you should have made a nice amount of money, even if you weren't in the Discord. If you took the thoughts, the trade suggestions, because I'm not a financial advisor, the trade ideas that were generated in the conversation, you would have made quite a bit of money. So what AMD says, I think that will kind of just have impact for the whole semiconductor space. They'll be talking to a different type of semiconductor, obviously, than NVIDIA or TSM or something like that. But just hearing more from different semiconductor companies will give us a bit more confidence in the ability of semiconductors to break out of this massive downtrend that we have been in since the beginning of the year. I think that's going to be a big deal. Let's see. What else? Yeah, I think the fact that Apple dropped below all of the moving averages again and is right below that downward trend line is not the look that anybody was really looking for. So if May 5th is the bearish day that it historically has been, then Apple is going to lose a lot of the kind of technical indicators that were helping it kind of slowly push up. But, here's the thing, right? Look at the candles that Apple has had going down. They're just like these massive full bodies, no wicks. You open and then you just push through the entire day, pushing to the downside. And then you look at these green candles and they're just so gentle and tiny. And I mean, it's like a trad wife. That thing is just looking to get run over. So I don't like the way that looks. I want to see a bit more kind of gusto in the move. And it doesn't have to be like some massive candles like, back when Apple kind of went down to the origin of its move around the 170, which we did talk about on the live, that if Apple would get down there, then my expectation is that it would have it could have a strong bounce out. And it did. It literally went from like the 170 almost straight to like the 210 in just like a week's time. And then it had a natural pullback, which is normal, but it did pull back below again, all of the EMAs. And then the candles after just like 2 weeks of really tiny candles, that is just not interesting. And the fact now that their key catalyst for bullishness is kind of done and dusted, and their dividend payout is on the 12th of May. So usually, like most companies have a bit of a pullback, just either going into the earnings payout or before. So I'm not like that excited about something like an Apple. I would need to see that it hit some kind of technical level that gives it, that energy for buying again. Netflix has been such a crazy outperformer. I mean, I understand like the business and all that kind of stuff, obviously. But the thing that I don't understand is, more people watch YouTube than watch Netflix. So like when you look at like volume of watched hours, and YouTube has just like massive ad sales, besides now this whole like premium thing that they're doing and stuff like that, but YouTube doesn't look anything like Netflix. So, YouTube maybe needs to take I don't know who actually owns YouTube. YouTube isn't its own thing. It's owned by somebody else. What's the parent company? I'm not even going to be able to think about it right now, but yeah, they are not performing like Netflix. That's all I can say about that. Let's see. Google. Yeah. Google is, I think that Google has a lot of positive energy here. That was something that we were talking about. We were expecting Google to, it's still down at the 165, but the fact that they talked about buybacks, the fact that their earnings came out really good, I think that I don't like that they're sitting on so many gaps. They're literally sitting on like 1, 2, like 5 price gaps, and gaps always like to get filled. So, and that would be a disaster if Google was back down at 150 to fill those gaps, just because then it would be like Apple, where it would be back into the downtrend and it would be below all of the moving averages. But their earnings were good. They're doing the buyback. So yeah, but how Google has not been able to get YouTube to turn them into a Netflix. Because, yeah, that ad sales is just something. All right, let's see. Are there any other stocks that you guys are looking forward to? A stock that I have not traded for a while, and I used to trade like almost every week, is ARM. And it is looking really strong compared to some of those other stocks. It has a similar charting situation to Google, but if ARM moves even $2, it will be above all of its moving averages and have turned all of the moving averages up, but they're not still in the right configuration because they're still negatively stacked. But if ARM would get to the 140, it would start to flip those moving averages positive. I think that as long as their earnings are not shocking and they can get above 125 has been a hard resistance for them. And they close the week at 123.30. So if they can get above that, 125, I think that they structurally are just going to be in a great place. And since the move down from 170 to 130 was just like straight down, the market doesn't like that many imbalances. The move back up could be much faster and more powerful than people are expecting on those on some of those companies. And I think FT&T kind of demonstrates the strength of some of those companies. Honestly, I'm excited about Palantir's earnings tomorrow, up or down. I just want to see what happens. Yeah, I think that Palantir has made another really great run. We have been playing that up to this 120. Our calendar spreads have just exploded. They've done so well. And, also, we've had members buying shares of Palantir since it was like down in the dumps. But yeah, I think it'll be really interesting. I wonder how much they'll talk about their projects with Israel, because a lot of the money that they make is actually from government contracts that they have with the Israeli government through the United States. That was actually one of their biggest hit items was lavender. So I wonder how much they'll talk about that, considering like the current political dynamics. Do they really want to be, another protest stock like McDonald's and Pepsi and Coke and all of those, and Starbucks and Target? So let's see. But Palantir is unique in the sense that it's done really well. It's been a strong company. It's been really innovative. And people kind of reconciled with their CEO, who he is, and not just his kind of awkwardness, but his political beliefs. So maybe people won't care at all, and it'll just be what it is because the company is making money. It's been a very solid company and a very solid outperformer. So let's see. What else are you guys looking at for this coming week? Oh, I want to hear what Carvana and Uber are both reporting this week. And they have also both been really strong outperformers. We have been in both of those. They had really nice charts weeks back. And we were kind of like, when this thing starts moving, we're not going to get another opportunity to get in. So we got in, and both of them are doing well. Uber reports Wednesday morning, and then Carvana reports Wednesday after the market. It could just end up being that based on what Uber says, Carvana has its move in the morning with Uber. So you might not want to sit on that too long. Because that would be, you may wait for the earnings report, but the squeeze has already taken place. Yeah, what else are you guys looking at? Everybody seems to like Uber. You guys like Uber over Carvana, but that Carvana chart is just, well, I don't know how much more of a move Carvana can make, if I'm honest. We've kind of caught the move that we were looking for. But yeah, this move into earnings has just been, if I say so myself. Since I can't hear you guys talk back to me, I can just make up a whole conversation by myself. How weird would that be? Let's see. Carvana, so you guys liked Uber. Let's see, what does Uber, yeah, that move. But the thing that I really like is that both Uber and Carvana had their move in spite of everybody else not yet having their move. They didn't wait for like the 25% drop on the NASDAQ in order to get going. So I like that. They just showed relative strength in overall. And that's something that we talked a lot about. Like on those massive down days, I just kept telling everybody, you really want to be looking for stocks that have relative strength. Because the stocks that are out can outperform or at least stay flat. It's not that they have to be like moving aggressively, but if everything else is dropping 5-10% and a particular stock isn't dropping at all, it means that it just has some kind of moat that is able to cope with whatever the wider market sentiment is. Uber and Carvana were two of them. The other two that I mentioned were Ulta. And that's also had a really nice breakout move. And there was one other that had an exact same chart with Ulta. And that also had a really, TTWO. Why can't I even think of the long name? But anyways, Grand Theft Auto people. They had just, all the negative news and they were just moving in a channel and then had this really nice, finally had a really strong breakout move about a week ago and 2 weeks ago. And we had been talking about that. I kept posting the chart that when this thing pops, is not coming back to visit us, friends. Because there's just too much. I mean, if institutions continue to force the stock price to stay where it's at, just means that the people that own the shares aren't selling whatever the wider market dynamics are. They don't care. And they're just waiting for the performance. So that relative strength was gorgeous. I'm not sure if there's anything else that you guys are looking at. Oh, I think Melly. Melly is also this week. Where are you, Melly? Come on. I know you're this week. I saw you. Yeah, Macabre Libre. Okay. It's on Thursday as well. That is just, again, it's just been moving in a channel. Now, of course, it's like a $1,000 channel, but if you've been catching the ranges, why not? But Melly wasn't giving you any reason to exit. It has, if you had got in with shares or, some kind of position, they're really different. Melly is just horrible for options. Their bid-ask spread is so wide. You could fit Kim Kardashian and Cardi B and Nicki Minaj between the spread. It's just too much. So, looking at it, you have to get in with shares. That's the best true option. And then, just move your stop loss up behind all of those, behind the up close candles. Because actually, if you look at the chart, you never had a red candle that closed below the last green candle before it. So you have a big green candle and then some smaller digestion candles, another green candle, digestion candles. So if you just moved your stop loss up behind those green candles or up closed candles, if you don't like using color coding, you would have been top. You would have been totally fine. You'd still be in the trade till now. Never revisited a protected low. So there you go. That's looking beautiful. Now, their earnings could come out. And again, this is a Latin American company, the Amazon of Latin America. So, the fact that the dollar is weakening is good for them. The fact that their customers are not US based customers. How much is tariffs going to impact them? How much do they benefit from the fact that tariffs is going to affect Amazon? Obviously, it's proved that it's not an emerging market company because it's obviously in the U.S. the U.S. stock exchange, but it still has a lot of the positive features that some of the emerging markets have had that have caused them to significantly outperform the United States. And then Bitcoin. Bitcoin did something really amazing. Bitcoin has finally bifurcated from growth stocks. So, for a long time, people were saying Bitcoin is a hedge, Bitcoin is a hedge, Bitcoin is a hedge. And really for the last 3 years, Bitcoin was not a hedge. There's like some people where they can't, their faith says exactly what they think, at least on a live. That's definitely my most negative quality. I can't hide my feelings. No, but Bitcoin was annoyingly tracking with risk assets. So it was tracking at like basically a 1-to-1 ratio. So when risk assets were doing poorly, it was doing poorly. When risk assets were doing well, it was doing well. But I think it was like about 2 months ago, Bitcoin separated. And so now they don't have that direct 1-to-1 correlation. Their correlation is at like 2 to 3 now, which basically means that it's reacting to its own metrics, and it's kind of like looking at two different sectors. What's impacting something like a XLU for utilities is not going to be the same thing that impacts XLK. So you wouldn't necessarily see any positive or negative correlation. They're in two separate sectors that aren't kind of overlapping. So that's now what we see with Bitcoin and risk assets. Before they were at a 1 for like 3 years, and now they're not. They're at like a 2 or a 3, which is doing their own thing, which is great. So now people who want to use, people who have been having to pay extra for hedges, like, like what's the word that I'm looking for? You feel like you have to get puts because like your whole portfolio is dropping, but Bitcoin now could actually function as a hedge for your account. Let's see. PayPal, that was what was asked. PayPal, let's look at you. So PayPal is basically doing the same that everyone else is doing. It obviously had a positive reaction on earnings. At this point, all of the other like electronic payment stocks seem to be outperforming PayPal. So I think SoFi is outperforming PayPal right now. Let me see about Affirm. I haven't looked at Affirm Affirm's earnings are this week actually. So they haven't had, but yeah, SoFi is holding stronger than PayPal. Let's see, Affirm. They're a little bit stronger than PayPal. PayPal is, yeah. So Affirm right now is stronger. So the good thing for Affirm is that if their earnings are also positive and they break out from this kind of 52 resistance, then they could easily get to 60, no problem, Upstart. So I think that there's another payment processor, SoFi, PayPal, Affirm. There's another one that's always like in that same mix. Think with me. There's another kind of, Square or Block. Now it's something else. XYZ. See, they changed their name and I'm like, don't even, okay. No, block isn't looking, yeah, that's whatever. I'm not dying about this chart. Oh no, whoa, their earnings were disastrous. I didn't even see that. Never mind. They're a total disaster. Well, if a firm pulls a block, then PayPal's gonna do great. No, but a firm's stock overall looks stronger. Even before the earnings, XYZ's stock doesn't, I mean, its chart doesn't look nice at all. So I'm not trash. Yup, basically. That's really the most polite way to describe what it is having. Obviously, Block caught dysentery on the tariffs news. It's just bleeding out the back. So nope, not interested in that. But PayPal, yeah, PayPal's doing okay. I just think that Affirm's chart looks a little bit stronger than PayPal. Upstart. Okay, Upstart, at least it broke out of that downtrend. They also have earnings this week. I don't like that they're not at the resistance. So like a lot of charts, they have this kind of downtrend and then they get this kind of like impulse up that looks like a bear flag. They don't complete the bear flag because then all the tariff, we get this massive leg down on NASDAQ, which then creates this kind of spring back. And then just the VIX dropping helps everything kind of get this like positive energy. But a lot of stocks, when you look at their chart, they've already come back to the top of that bear flag. So, or they've closed just above that resistance. The fact that Upstart hasn't done that, their earnings need to be really phenomenal. If their earnings come out and they're like super duper, and they can get above the 60 and hold, because what I would be afraid of is that their earnings come out and they're decent, and then they gap up, and then they just give the whole move back. Because there are some companies that obviously did that. Hims was one of those companies where it had a big gap up, gave the entire move back, but then at the end of the week, they had the gap up on the really good news, and then gave it all back. And then at the end of the week, they had a nice big squeeze. I don't know that Upstart is going to have a kind of a Wegovy moment for it to give it that like extra energy. So I'm not sure. The chart for me, I would be much more interested above the 56 level. Yeah. That's what I would like to see above the 56. Any other charts that you guys are looking at or interested in for this week? Oh, Shopify. That was one that was like a disaster drop for a while, but its chart is looking much nicer now. So Shopify is a chart that where you can see that it's back to the top of the bear flag. So it could use Monday, Tuesday, Wednesday to like digest, create a nice base, and then when they break out, they have a lot of that undergirding support. I just didn't see that in Upstart. Datadog's another one that I really like. And that has had a nice recovery here. And that was something that I liked last year as well, but it obviously fell apart. It's just too small of a company to be able to cope with everything that has been happening. GitLab was another one that was just gorgeous. Just had some beautiful moves, and then it was just too small of a company to be able to cope with the overall pressure. But so just to recap, as we go into the week, we obviously have FOMC Wednesday, and then Thursday we have all the FOMC presidents coming out to chit chat about the FOMC meeting the day before. Like I said, I don't think that it's going to be the massive macro event that everybody's looking for. Obviously, we always have the same kind of market move that, first you have the release about what they're doing with rates. That's 30 minutes before the presentation. You always get one massive move on that. Then usually you give it all back. Then you have another massive move. And then in the overnight, you kind of stabilize. So for people who love scalping the market, like I always say, market news just gives you an acceleration to the move that was already going to happen. News often doesn't create the market structure. The market structure is already there. It's just the speed, the velocity of the move starts to get more intense because of the kind of the volatility that the news release creates. So if you are watching and you are charting up and you are good at your charts, you should be able to find those targets of where you think the price is going to take you. And if you're good at, scalping, then you can obviously catch those moves. There are some people in our group that, are really fast, or they don't trade options. They just trade with futures because they can get in and out faster. But if your charts are tight, you should be able to kind of see where the market is leading, because the market usually shows its hand on the Tuesday into the Wednesday morning before the FOMC meetings even come out. You kind of know what it's going to do because, just kind of whiplashes into the moves that you were already expecting could happen on a larger time frame. All right. So I think the big thing is that remember, May 5th historically is a very bearish day. So, if you need to take profits on things, if you are in something that's been really overextended, or you have, caught a really nice move, you might want to consider how you want to respond to that. The other thing that you might want to do is on really strong down days, that's a great time to sell puts. And the reason is twofold. On down days, the VIX is always higher. And any stock, when it is contracting, it has a very high vega. So if you have a stock that has one really strong push down, the volatility is so high that you can often sell puts way outside the implied move and then just let it kind of sit there and decay as the price chops around and does nothing. Very rarely do you have a massive drop down and then like another massive drop down, because then the news is kind of out and there's not really another massive catalyst to give that big of a influx, unless it's something crazy like the CEO has been assassinated, like what happened, or has been murdered, like what happened with UNH. But I think that, those things, then that's like a completely different situation that nobody could have seen coming. But, generally speaking, stocks that have one massive leg down usually get some kind of digestion movement before it makes the next leg down, if it's going to. So those big red days, those are great days to sell puts because you're selling a lot of volatility, a lot of vega, and then just on the digestion, you can make decent returns just on the volatility crush. So just a hot take from the Trade Speakeasy. All right, friends, I hope you guys have a great week. Those who were interested in joining the mentorship, we did have our first mentorship meeting on Saturday. There's obviously still time to sign up and catch up, but I'm just saying, like Saturday, I was so excited for the next 8 weeks or 7 weeks now. We are going to be covering a bunch of strategies that we have not really talked about for years. And I know a lot of people say that, I don't need to dig into the Greeks that much. But I'll tell you, I was extremely impressed with the members that have been in the Discord and then are joining us for this mentorship. When we came to the charts, so the homework assignment that we gave was that people should find a chart and then they should be ready to kind of tell us what their price target is for the underlying, and kind of the duration of time they think it'll take the price to get there, and kind of give us some reasoning. And then the person could share what their trade idea was. But I was so impressed because some of the members gave like 6 different types of setups. And for each one, they were like, well, because volatility is high during this week and low during this week, I might set up a calendar spread, or I might set up a butterfly and I might widen the debit spread. Or if they were a little bit more neutral on the transition, they might widen the debit spread. Other people did synthetic trades, like a short put with a long call. Others said, no, I just do a long call. Others said, no, I would do a short put. And different, everybody came and they were like giving 5 or 6, 7 different trade types. And even for me, I was like, oh, I actually wouldn't have thought in this scenario to do a long butterfly with a wider debit spread. But that's actually a really good idea. And actually that trade idea would have probably performed better than my trade idea. So, one of the things about feeling confident in these types of markets is feeling like you don't have to do the same thing every single time. It's like, I don't know, it's like people who've been married for 1,000,000 years and then somebody suggests, why don't you try different positions? And then, people are like, it's working for us. But sometimes you discover a whole other world of interesting things when you're a little bit creative. So, I know that there's a simplicity to just like rinsing and repeating the same strategy setups, but it's also very empowering to come to a chart and say, okay, this thing is going to be consolidating for the next 2 or 3 weeks. So instead of having to say, oh, okay, so I'm not even going to be interested in that chart, being able to say, okay, I could do a short strangle, I could do an iron butterfly, I could do an iron condor, I could do a short call, I could do a short put. And then looking at another chart and saying, oh, okay, actually, I think that's very bearish, but we have way too much volatility, so I don't want to do a long put because the IV crush will kill the valuations. So then somebody's like, okay, well, you could do a put calendar or a put diagonal or a put long butterfly, or you could just do a short call or a call credit spread. Or you could do a short call with a long put to minimize the volatility crush. And there you go. You have 6 different ways to play the same stock. Each would give you a different type of return, and each one would manage time decay or volatility decay or consolidation in a way that would help you not just lose value on a long call or a long put. So, I know that it takes time to learn these things, but there's a reason why hedge fund managers and money managers are some of the highest paid people in the world. And those are the people you're competing against. So, the reality is if you want to do a marathon, you might want to, be ready to jog next to a Kenyan. Or otherwise, well, that could be embarrassing for everybody, right? So, it's okay to join in the stock market, to participate in the stock market, but don't have a ceiling for yourself. Don't just say, oh, because I'm a retail investor, I can't learn any of these things, because that's not true. You can. It does take time, and, pace yourself. It doesn't happen overnight. It is a lot of information. However, over time, especially when you practice the trades and you take them and you start to apply them and you listen to how other people are taking the trades, it does give you a lot more confidence. What I tell most of my members is you actually already know a lot more than you realize. You're just a little bit nervous. So just talk it out, say what you're thinking, and we can give you feedback. And, 9 out of 10 times they have a very profitable idea. One lady in the group who posted her last 45 trade ideas, and every single one of them hit more than just from the trade ideas for the last, those 30 trade ideas she had for the last couple of weeks, on like a $20,000 account, her account would easily be over $150,000 right now. Like her trade ideas were phenomenal. But, you know, she was like, no, I don't know exactly the nuances between this or this. So I just kind of set it up to see how it would perform. And then she was blown away because she had a 100% win rate. And it's like, because I've been telling you, you know, these strategies, you just, you know, need to keep practicing, and even if you have to do them in sim, do it in sim until you feel confident. But tell us what your ideas are, because somebody who is really good at those trades will be able to give you immediate feedback. Oh, like, that's amazing idea. Like, I love it. I didn't see it. I wasn't looking at that chart at all. But now that you pointed it out and I do a little bit of work, that looks great. And, you know, some of the people in the Discord, they make more money on the other members' ideas than even like our general callouts, which is great because it means that people are learning how to do the trades. Our Discord is not really, my passion is not that like people come to my Discord as a signal service. I don't mind if they do because I know that I make money. And so, you know, if people want to copy my trade ideas, I don't, you know, and it works for their account, brilliant. But I want people to get to a point where they can like decide their own stuff and take trades on charts that maybe I don't like maybe it's a stock I don't trade, but they love it and they're in it and they want to, you know, be more active with it, but then they have all the tools to do that. So if you're interested in the mentorship, you can still sign up. I know it might feel a little bit intimidating, but I'm nice. I don't bite. And even if I did, it is over Discord. So I probably wouldn't injure you too badly through the voice channel, right? Okay, friends. Well, if you do have any questions about the Discord or about the mentorship, feel free to reach out to me on, I reply to my DMs as long as you're not a bot or creepy. And yeah, so I have 2 books on the Greeks. Can't wait to read them and ask more questions. Always. Oh, I love the questions. They're wonderful. And I hope you guys have an amazing trading week. And I hope that you're feeling less concerned about your IRAs and all of your stock holdings. We are still down about 10% from the top, but at least we're not down 25% like we had been a couple weeks ago. So this has been a nice moment to breathe. Again, as I have been saying in the last 2 or 3 or 4 lives, this summer could be a very difficult summer. If at any point in time the Fed decides that they need to be more aggressive about rate cuts, it will scare the market, because it doesn't just mean that we are around the bend on recession. It will mean that there are likely going to be a lot of layoffs that people hadn't anticipated. So maybe in sectors that people hadn't expected to see job contraction. And secondly, that inflation could be returning, which is, as we already know, extremely hard on like people always say it's like extremely hard on those in the lower 50% of earners. But honestly, I think everybody was talking about the price of eggs the last couple of years. My neighbor gives me free eggs. So I don't even know what the price of eggs are if you asked me. But that's just because I live in Germany and I live next to a bunch of farms. So, we can get all of those things from people that we know and love, and know and love my kids. So they always give us, it's different when you're part of a community that has all of those things. They love to share with their neighbors. But I know that was very stressful for a lot of people, just the creeping cost of living. Oh, wow. Okay. If eggs were $7, that's a lot. That's $1 an egg. And we eat a lot of eggs. I would need to have like a whole grocery budget for eggs. I mean, really, we eat a lot of eggs. I mean, I go through 24 eggs like this. I feel some type of way now. Okay, I am not moving to Georgia. That's all. I heard you have great peaches, but and it's hot and humid, I think, in Atlanta. So, nah. I don't mind hot, but humid. I already did that in Houston and in Cyprus and in Dubai. The one thing I love about living somewhere with no humidity, no roaches. Jesus, those flying, oh man, made all the hair on my body stand up. Anyways, I don't know how I'm ending this live in such a funny way, but I hope that you guys have a great trading week. And if you have any questions about the Discord or the mentorship, feel free to reach out to me. We have a lot of earnings this week, so I hope that you guys are on the right side of the trade and that you have an extremely profitable week. And if you saw the stories, if you're interested in that, in our one trade a day, then you can also reach out and ask about that, how to be a part of that, the group that is doing those trades, and I will point you in the right direction. All right. I hope you guys have a great week, and bye for now.